Again, the economics editor of the Financial Times, Giles. Good morning, Chris.
Good morning, Justin. I'm not sure, just as in 2016, I was a little bit depressing about the prospects for the industry. I think today, again, I'm going to have to give a short, honest, and largely depressing talk. I'm going to go through the global and UK outlooks in a world of COVID-19 and Brexit. So if we first of all look at what the global outlook looks like, we're going to have, for certain, the worst depression since the Second World War. Only the 1930s was worse than this. Globally, this is much more serious than the global financial crisis over a decade ago, and we're looking at a contraction of the world economy, probably around 6% or so, and that's an enormous decline. Normally, we think of growth of under 2.5% as a global recession. It's made darker by the fact that even though countries themselves domestically have put in place policies that have supported domestic economies, globally we're not seeing the level of cooperation that we saw in 2008, 2009. And certainly we're seeing additional tensions between the US and China, and just last week on international taxation, which could blow up on the transatlantic front in the months ahead. So there's another reason to be slightly concerned. When we're looking at the individual countries involved, we can see that really the COVID crisis hasn't spared anyone. There are differences in forecasts. So this chart shows the difference between growth rates in 2019 and projected growth rates in 2020. And you can see of the G7 countries on the left, UK, France, and Italy, very much at the bottom. I wouldn't make a big difference, a big thing of the differences between them. Canada, US, Germany, and Japan hit hard still 6 or 7% down on where they were last year, but slightly better. And if there's any difference between the performance of the countries, it tends to be countries that have had harder or weaker levels of coronavirus. So where countries have been hit hard, the economies have been hit hard too. And on the right, we see the large emerging economies. And although their absolute growth rates this year are likely to be faster because their overall growth rates tend to be quicker anyway, the change from last year is pretty much the same as we're seeing in advanced economies. So when we look at where things are likely to go from here, I think the first thing we can say, just as your previous speaker said, at first when we reopen economies, we do see something of a V-shape. And if we can look at the next chart, we see this is a projection from the OECD just from a week or so ago. If you look at the blue line, you see the projection shows quite a sharp V at first, but then petering out, and with a possibility, of course, of a second wave, and that's the green line, of a double hit of coronavirus. But ignore the green line for now. Let's assume there isn't a second wave and think about what this means for the global economy. It means at first things get back to normal quite quickly. Lots of things come back, but then it doesn't get all the way to where we thought it was going to be. Why is that? Because people are cautious. There are still social distancing rules, means that certain businesses can't operate effectively or as they normally do. And it means the recovery then falls short and potentially pretty significantly short. So in this chart, in this OECD forecast, at the end of 2021, it still shows the level of output in the advanced economies being 5% lower than where we thought it would be only last November. That is a huge amount. That's bigger than the financial crisis. And it is that gap. It's not the gap we're seeing, the really amazing declines we've seen in the very short term in our economies. It's the persistent declines that means that ultimately we're likely to see higher unemployment and potential problems of a lack of demand. And of course, there is also the caution and the possibility of a second wave, which would make things even worse. But this is the reason I think we need to be concerned about the global economy in the longer term. So what about the UK? If we move to the UK, we see that the output drop in April, this is going to be the worst of it, was quite extraordinary. 25% down on February, and we lost, in putting it in other ways, 18 years of economic progress in 2 months. Now, we know this has come back somewhat in May and in June. And if we look at what's happened since shops are opened, the daily chart of stores across the UK, spending in stores, we can see, if we move on one more slide, we can see that stores came back really rather quickly last week when shops are opened. So there is pent-up demand out there, and there is a willingness to spend among quite a lot of people. Incomes have not dropped so much. If we can move another slide on, please. And we see the effects of the government policy. So what has government been doing? It's been doing three things through this crisis. It's been providing insurance so that people and companies don't go bust through the crisis. Now we're moving into a second phase where there's going to be some stimulus. I think some of it's been overblown in the media, but we are going to see some infrastructure programs brought forward, perhaps more help in specific sectors, potentially for hospitality, pubs, restaurants, etc., and travel in the months ahead. And then thirdly, the bad news or more difficult news is by the end of the year, we're likely to see some consolidation as we see the reckoning, the long-term reckoning of this crisis. And now all the while this is going on when we've got the Brexit talks going on, and the Brexit talks are, if anything, I think going quite well at the moment. So the latest sort of mood music coming out of the talks is that we're now out of the EU and that a deal does want to be done by both sides. And the two big sticking points, fishing and state aids, do look as if they can find a compromise. But of course, the compromises means that we're going to get a very limited deal. So we shouldn't expect the world in any way to go back to normal. Ministers all say, we've accepted there's going to be friction on the borders. That's something we've accepted. Therefore, we can do a deal. So it's going to be a limited deal, zero tariffs, zero quotas. But other than that, other trade facilitations, probably not there. And for the manufacturing industry and for the motor manufacturing industry, rules of origin is a big unknown. Looking at manufacturing, looking at the sectors of the economy, we can see that manufacturing overall in the downturn hasn't been hit as hard as construction, pretty similar to services. But then when we look at the specific sectors, motor vehicles and the motor trade itself have seen drops which are quite extraordinary in April, down nearly 100%. So one of the big things for government will be how to ensure this comes back. We would expect quite a big bounce in the short term, but I don't see things like a car scrappage scheme being on the agenda. So while none of this is very cheery, it does definitely is going to be quite a bounce back in the months ahead. And then in the future, we'll need to face the facts honestly that there has been quite a lot of damage done by this crisis, and there will be a difficult path ahead.
Chris, can I just pick you up on the car scrappage scheme? Why not? What's the government's thinking as you understand it? What's the economic thinking?
The economic thinking is essentially that it doesn't really help the UK economy. That what happens is that most people will buy, 90% of cars bought in this country are imported. So it's a scheme effectively to help other countries' economies and maybe car dealers, car showrooms, but not the UK economy as a whole. I would have thought if there's going to be specific help for any industry, it's really much more likely to be targeted on the hospitality industry and maybe domestic gas and boilers. But there does seem to be, from what I've picked up, very little appetite in Treasury or elsewhere for a car scrappage scheme this time round.
And on the question that you addressed about the talks at the moment with Europe potentially going rather better, perhaps better than some expected, does that mean that the big sticking points, so you're thinking fish, you're thinking level playing field, to mention two very big ones. Does that mean that progress has been made on those, or is it that the other things, the potential kind of landing ground, has been sorted? Where is the grounds for optimism?
I think the grounds for optimism is that both sides want a deal, and it doesn't mean that it's going to be a great deal. It's going to be a lot of fudge. People in Brussels, a lot of people paid a lot of money to be able to stir up the fudge and make it work. But I think what's going to happen is it's going to be very similar. So, for example, on state aid, level playing field, the thinking at the moment seems to be that it might well be some sort of compromise where Britain effectively agrees to what Europe wanted, but it's not going to be governed by the European Court of Justice. It'll be a much more potentially abrasive control process in which, if Britain then decides to go against the agreement, the EU can impose tariffs very, very quickly, and that would be part of the dispute resolution mechanism in the agreement. So that way, Britain says it keeps its control, it's in control, but Europe feels that they're not going to have a cheap, low-cost manufacturing hub off the edge of their continent, and that is the one thing that they will not want to have.
But the downside of that, though, is we are in permanent dispute.
Yes, of course. That is, it's not necessarily a recipe for harmonious relationships with Europe over a long time, unless, of course, we actually don't go ahead and do things that are likely to irritate the EU. And in lots of ways, for our own domestic economy, we probably don't want to put in place lots of state aids. We have domestic rules and laws against that. So it could be one of these rather ingenious compromises where, in fact, we think for our own domestic economy, it's not worth trying to undercut Europe, and that way it's just a way of at least getting an agreement through.
Yeah. Final thought from you on the wider picture, and going back, I suppose, to those graphs. What would the impact be of a vaccine? And you think of all the efforts that are going in around the world, not least at Oxford and at Imperial College in London, and the potential, and the Oxford scientists were talking about it yesterday, of something being not just in the pipeline, but actually being injected into people by the end of this year. What do your charts take that into account, or do they discount it, or what?
They don't take it into account yet, and that would be the potential fantastic news for the global economy, because that would mean that we wouldn't have to have a major transition from the way we used to do business to the way in future we're likely to have to do business, with greater social distancing, more working from home, less use of public transport, all of that. And that 5% drop in the forecast I showed wouldn't have to be that large. All of that big, long-term, persistent drop comes from having to make big transitions to the way we do business. A vaccine is the one get-out-of-jail-free card. Potentially, that means we don't have to change the way we work, because there wasn't something fundamentally wrong with the global economy before this crisis, unlike the global financial crisis. So the persistent damage comes from having to change the way we do business. And that vaccine is the potential for that.
That's interesting. So, but in just assume that we do get a vaccine, or vaccines actually, plural, which I think is certainly the aim, and indeed the possibility. What then happens to the way, and this is real crystal ball stuff, but it's a fascinating thought, isn't it? What happens to the way in which people do think about rethinking the global economy, about supply chains, etc., and about a kind of that visceral sense of nationalism? So when people talk about the pharma industry, they talk about now making your own drugs close to home, etc., Is that something that happens with all the attendant costs and potential benefits in spite of the vaccine, or do you think we just go back to thinking the way we always used to think?
I think that's a really good question. It's one of the things that's really uncertain in the world we face ahead of us. There's a fundamental trade-off, I think, between resilience, where we might want to do more things domestically, have more localized supply chains so that we're not beholden on companies halfway around the world where they might have another disease or something else going wrong in their economies, and cost, because the reason we have these very highly integrated supply chains with manufacturers halfway around the world is because that's the most efficient way of doing business. And that is a fundamental trade-off. We might well want to make ourselves more resilient in future, in pharma, in manufacturing, in many parts of life. But of course, that costs more. And then that means ultimately we are all going to be slightly worse off.
Yeah. I was going to say wonderful words on which to end, but they're not. But there we are. They never quite are. But it's always a pleasure to talk to you, Chris, and I hope face to face in a year's time. Thanks again for joining us this morning.